what does real wealth mean to you?
Time and freedom to enjoy the things that fill up your cup.
Talk to me a little bit more about Damn Good Drams as a business and your partnership there.
When we were drinking these indie bottlings, we realised it wasn't one shop that just sold these things,
Yeah.
We had a few brands that we liked, but you could only get this one at that shop and this one in this shop.
Mm-hmm.
And we were like, okay, why don't we just make a one-stop shop for indie whiskey?
Yeah.
And that was how Damn Good Drams kind of started. We just reached out to our favourite brands and said, hey, can we buy some wholesale and then sell it on? And they were like, yeah, sure.
What would be your kind of primary advice for anybody that's thinking about starting to invest in whiskey? Julian Mithofs, welcome to the Real Wealth Podcast.
Thank you very much for having me on. It's a pleasure.
You're more than welcome. I think where I'm going to start, and I've started this way a few times, but I think it's really pertinent with you. My view of having done this for a while now and speaking to all different types of entrepreneurs and people that are building their own business, they generally fit into two categories. Guys that have done it from birth, they're just inherently entrepreneurial and it's ingrained within them. They were always trying to find a business opportunity and everything. And then guys that found it a little bit later in life, usually because it was some sort of catalyst event in their life. And that's certainly where I fit in. I didn't find entrepreneurship till my 30s, and I feel like you're kind of in that category. I haven't heard a little bit about your backstory, but tell us about your story that ultimately led you to the path that you're on right now.
All right, so I'm definitely in the latter of those two categories. Yeah. I started off just the employee route, went to school, but even then, like in high school, we were very pushed to go to uni and UCAS applications and all this, and I just hated it. I didn't want to do any of that. My grades weren't that great. I really wanted to be a pilot when I was in school, which started by when I was 16. I got a trial flight lesson up in Cumbernauld. And I was like, all right, this is awesome. I want to do this as a job. So my plan after high school was always to go and be a commercial pilot.
Yeah.
And then when I was 18, I went to Florida, to Kissimmee, and I was there for 8 weeks, flew every day, did like an accelerated pilot's training, got my PPL there, and came back. And then when I wanted to do the commercial training, I actually failed the medical exam.
Oh, shit.
And they didn't think to test me before doing it while I was.
So you went all that way through those accelerator programs and they hadn't tested your eyesight.
So I'd done the PPL, which is like the first license, the one you can use to fly the small ones around here recreationally.
Yeah.
But then when it came to go into the commercial, you need to do a more advanced medical exam. And I failed on my eyesight, and it was something really dumb as well. It's my eyes don't work independently that well.
Right.
So you need independent 20/20, and if I look just on my right one, it's just below. You know how you've got those, I don't know what they're called, but it's the lines with the letters.
Yeah.
I couldn't read all the letters on the last line, and they failed me. But the guy said, like, look, you need to do this exam every year, and I could pass you this year, but you'd be paying like 100 grand to do all your training. You get into a lot of debt doing it as well, like all
I was going to say that, I understand from a few people that are going through the process, it's very expensive.
Oh, yeah.
People talk about higher education being expensive, but in Scotland, a lot of it's funded. But to be a pilot, there's not a lot of funding out there, right?
Yeah, 9 out of 10, well, there is, but you get into debt for it. It's not like you get grants or something. I think only a select few do. So I was like, okay, no, that's not happening. So my fallback was engineering.
Was it a really hard blow for you at the time?
I was devastated.
Yeah.
It reminds me almost of that scene in Little Miss Sunshine. Did you ever watch that movie?
I have seen it, yeah.
The guy can't be a fighter pilot because he's colorblind. Yeah, it was heartbreaking, but I was like, okay, I'll just move on. Do engineering. Went to college and down in Ayr. Didn't have the grades to go straight into uni, so went to college, did an HNC, HND, and then went into uni there. And in college, I met Paul Javison, who I now run Damn Good Drams with.
Yeah.
Palacio Spirits Co. So we met there. And the two of us actually went through college together, uni together, and then got a job together in the same company, Collins Aerospace.
Inseparable.
Yeah, exactly. But I worked there for 5 years, almost, just under. I quickly realised I hate engineering. I was a terrible engineer. my grades were good in uni. Like I could remember stuff well, and I feel like I knew how to practice for exams and how to do exams, but actual engineering side of things, like
the practical implementation of it just didn't do it for you.
Yeah, it just didn't interest me as well. Like, and I even saw that in my job. I was tending towards things in there that weren't engineering based. So I started as a kind of business operations assistant kind of thing. So just helping day-to-day tasks there. But I did go into a bid manager role.
Yeah.
Where I was pricing repair jobs for airlines. So like you'd get like a bird strike on the engine skin, and the airline would send in a damage picture, and I'd price up the repair, sort of how long is it going to take, what materials it's going to cost, give them a quote sort of thing. And it just didn't interest me. I was bored, soulless, like sitting in an office 9 to 5. Everyone around me was doing the same thing for like 15 years.
It's a story you hear so often, but the unfortunate reality for a lot of people is they're still there 20 years on, you know.
Yeah.
Because this is the path that you've set. And by the way, a path that you've set when you're 17, 18, 19 that you're expected to follow through with to retirement. It seems bizarre that we have this fixed view of you're going to learn this, you're going to put yourself in this box based on a decision you made when you weren't even an adult. With really no guidance either. You know, I was speaking about this on the podcast with Sam Kavanagh the other day. Just, you know, parents all think they're doing the right thing for you, pushing you through the educational system. I can't say many positive things about it, speaking as someone who's been through it and done university and further education after that. It's not setting you up practically well for life. And it is a bit outdated, especially if you come from more of a working class background like I did and like Sam was talking about, because, you know, university and higher education was kind of out of reach for our parents. And it was deemed as a way to make sure that your children have a better life, but that's not the reality of it now. You know, they're doing the best for you, but based on outdated principles, which, you know, can be really damaging and put people on a path of a lot of unhappiness in life.
Yeah, but for most of the people, that is just normal.
That's a reality.
And that is the reality. And it was a conversation I had in the office that really made something switch for me as well. I'd just gotten, as I was saying, I wanted to tend towards other things in the office. I actually went more down a digital path.
Yeah.
I was the youngest in the office as well, so folk were coming to me with issues with
How
Excel and access databases and stuff. And I mean, I just Googled it. That made me the tech expert all of a sudden. And I actually got promoted to the digital transformation manager for the site.
Right.
And I was totally out of my depth. I didn't know what the hell I was doing. I didn't do IT or anything in uni, you know.
Yeah, you were learning on the hoof.
Yeah, I could Google stuff.
Yeah.
That was it.
Yeah, YouTube's a wonderful invention for that stuff. You know, anytime I need to do anything, I don't know, there's a video on it. But trying to build your career around that must have been pretty challenging.
It was. And it was definitely taking its toll as well, because I felt very out of my depth. I felt like I wasn't doing the right thing, wasn't on the right path. But it was when I got that promotion and I got a pay rise, I actually had a conversation with someone who worked close to me there, who'd been working there for 16 years or so. And they were in a similar role to me, but they'd been there so long, and we both realized that we were now on the same pay.
Yeah.
And I was like, how could that be? I've just come into this company. How could you not be earning way more than me? And
yeah.
I kind of like did a bit of digging, found out what other people were earning as well. I was like, oh wow, there's the ceiling, I guess, at least for my job. And I could kind of tell what the people, there wasn't much progress left really. Like there was maybe a manager job or like team leaders and such like that, but they won't been earning much more either.
No.
Because that's not that appealing.
It's a shocking realization, but again, one you came to quite early in your career, which, you know, it could happen a lot further down the line for a lot of people. But the bigger the organization, the more rigid pay structures they have, and you know, if you're talented, you're just going to hit the pay ceiling much quicker. You know, that's the reward you get for talent, is you'll hit the ceiling much quicker, and unless you move or diversify and go and do something else, then you know that's where you're at.
That's it.
Were you always good with money through this time? You know, as you started earning a bit more money, were you good at saving? Were you good at managing it?
Maybe not so much. I definitely wasn't educated in money at all. That came a little later. I was on good pay, and I guess I did save it kind of. I did like splashing out and things. I'm very much a car guy.
Yeah.
So I loved modding my car and buying stuff for it.
Absolutely,
and stuff like that. So a lot of my money was getting sunk into that. A lot was going into flying as well. So I wasn't really saving that much.
So you were still flying through this period, and you know, it became
flying as a hobby.
A hobby, yeah. An expensive hobby, I would imagine.
Very expensive hobby, unfortunately. So it's something I have dialed back now. I've not flown in over a year now. I want to get back in this year. It's one of my goals.
One of your goals for the year
for 2024. But the financial education came after the catalyst, as we were saying. So in 2019, my dad passed away. Yeah, and it was quite sudden. We were actually on holiday in Tenerife when it happened over Christmas and New Year's. And that was a very strange kind of limbo period for me there, because we were there for over a month. Because when it was over New Year's, so there wasn't a lot happening, there wasn't a lot open. Everything was kind of going a bit slower. And he had to be cremated there, and he was in hospital there, he was on coma and everything. So we were there in this holiday situation, but in a kind of mourning state, and it was a strange time.
I mean, it's a horrendous thing to have to go through, and you don't expect to have to go through it so young, but to do it in a foreign country where you're not really sure what's happening and what the process is going to be, and you know, it sounds horrendous.
It's definitely changed my kind of outlook on life. Something changed, something clicked. Yeah, it was like a breakdown and a rebuild after that, and it was from that kind of point that I wasn't happy in the job anymore. I was like, right, this has to go. The relationship I was in started declining after that as well. Yeah, that ended up ending a few years after, but it was definitely on the road down after that. There's a couple.
Do you feel like you were approaching everything with fresh eyes following that event?
Definitely. It was there's a term that I heard, I saw in a book. It was metanoia, and it's like a complete breakdown of character and rebuild, and I feel like that's exactly what happened to me there. It was turned a new chapter, I guess, after that. But the reason that kind of led me on to the financial side and the business side was my dad, his life insurance was paid out to me. That was written out in his will. And he was German, as you might have noticed.
You gathered by the surname.
My surname isn't very Scottish, so that was paid out in euros. So I had to set up a German bank account, and the money was transferred into there. It was 70,000 euros. And my plan was, okay, I just won't touch that. You know, everyone said, just leave it there. That's your retirement. Yes. Just save it. I was like, okay, yeah, fair enough. I didn't know anything better. And German interest rates were just as bad as everything else was back then. It was like 0.01. This was in those days still, before everything went crazy. And you actually had to pay to have your money in German bank accounts as well. So I had this on an app, and every month I could see like minus 7 euros. It was just going like down, red. Wasn't spending anything. I was like, this is nuts. Like, there's not going to be anything left by the time I want to use this. You know? So it was around that time that I started looking into, like, how could I invest this? Or what could I do with this? Or is there anything I could do?
It's really one of the biggest misconceptions of what I would call the system in what we're taught is that the bank is the safest place to have your money. And the amount of people that fall into that trap through the process, never mind the fractional reserve system where they're allowed to leverage their money up to 10 times and lend it out to whoever they want. They didn't do a very good job of that in 2008. The fact that, you know, only the first 80,000 is protected in the bank, you know, the fact that, you know, you're having to pay to keep your money there when they're making money on your money. And that's, you're seeing tangibly it go down. So that was a catalyst. But a lot of people that don't have that scenario, they don't see it go down, but it's still going down in reality because inflation is eating away at it day in, day out, you know. So it's so critically important that you don't leave money sitting in the bank when you could be, and what you turned that into was then the opportunity to leave your job in the not too far distant future. And that's it. Another mindset shift, people talking about it as, you know, this is for your retirement further down the line. Why would you want it in, you know, 40 years when you can accelerate that and get the benefit of it now? And that doesn't mean blowing it on fast cars, but it means making that money work for you so you don't have to.
Yeah, absolutely. And inflation wasn't even something I knew what it was back then.
Yeah.
I never considered it.
Yeah.
It was
because they don't teach it, right?
Aye, exactly.
No incentive whatsoever for the government to put that into schools.
It was around the first lockdown kind of time. That's when I had a lot of time on my hands to really dive into research and reading about it. And I read things like Rich Dad, Poor Dad, Richest Man in Babylon, things like that.
Those are classics, and, you know, I probably spoke about Rich Dad, Poor Dad a lot because it is a catalyst for a lot of people, particularly in property, but generally in entrepreneurship, because it does teach those fundamental money lessons, and I love it. But Richest Man in Babylon is an interesting one because whilst I talk about a lot of my favourite books in this podcast, you know, I always mention Rich Dad Poor Dad, always mention the 5 a.m. Club, Atomic Habits. These are books that made a change in my life. But The Richest Man in Babylon is the only one where I've actually done a podcast, you know, doing an overview of the book, because I find it fascinating that this book was written in the 1920s, based 4,000 years ago, and all of the wealth lessons that it teaches are still relevant today. You know, it really is a cool book, and it tells it in an engaging way, you know, so that's a really good recommendation for anybody that's starting a wealth journey.
It's one that I've definitely gone back to 2 or 3 times again, and it was so that kind of started my financial education side of things. But then I got this ad on Instagram from Martin Roberts, was under the hammer, and he was selling a property course from Asset Academy, and I ended up going on that course. And that
have an interest in property, or just an interest generally in wealth creation, and you just found the
wealth creation,
broadly,
no specific interest in property. I didn't know that was the path I was going to go down. I had my own flat in Ayr where I was staying, but that was it. You know, I was still living in that, and it was after that I did eventually move to Glasgow and turned that into my first buy-to-let. Then mortgaged it, took the money out, rented it out. That kind of was the start of the journey. And then the course taught me everything I had to know about basic buy-to-lets, leveraging. There's a lot of mindset shifts in there as well. You know, they went quite heavy in that. It was all online based, of course, at the time. This was in the height of COVID. And then
I think the mindset one's an interesting one, because it always kind of sounds a bit overdone when it comes to training education platforms, but in reality, and we see this play out all the time with our clients, is getting your head right first is the first step. And you are fortunate and unfortunate to have this catalyst in your life that propelled that change, but most people don't have that. And if they don't get over those initial mindset battles, because investment is generally a long-term game, there are massive ups and downs along the road, and if you don't get used to dealing with the downs, you know, that's what kills most people's journey quite early on.
Absolutely. Yeah, I think it was on your podcast with Donald who said wealth is in the mind and the heart, not the pocket, or something like that.
Yeah. No, that's a good quote. I like that one.
It's really good. And you're absolutely right. Like, the mindset is the most important thing to change first, because that's one thing I didn't have, and that's why I didn't know to do any of this stuff. I didn't think that it was possible, but the property thing was just like, okay, this seems like the right vehicle to kind of take me down this. I had a pot to play with. As soon as the market opened again, I was just viewings.
So this is during COVID?
Yeah. As soon as the market opened again in COVID, I was just doing as many as I could, putting in silly offers. Like,
pretty strong market at that time as well, right?
Yeah, it was tough. I was getting a lot of rejection, which is good, you know.
Yeah, no, you got to get used to the rejection early on.
Aye, absolutely. A lot of people tell me to get to fucking because I was just this young guy, like, going in, you know, with my little clipboard. I had a checklist of things to tick off when you're doing like an intellectual, like, oh, are the windows double glazed? How old's the boiler? What make is it, sort of thing?
Yeah. It's I mean, my business partner Laurie got banned from making offers with Slater Hall because he just kept putting these ridiculously low offers in. I'm like, just get out of my office, you know. But you know, it's just part of the learning curve.
But that's the thing, you know, out of maybe the 100 offers that I put in, eventually
you got the one, yeah.
And actually, there was 2 at once. Was my first 2. It was a 1-bed flat in Milnebank Street in Denniston, and 2-bed flat in Westmoreland.
Denniston's quite an up and coming area now.
It's good, yeah. That one's done really well. The other one, the Govan Hill one, Westmoreland Street, has been the bane of my life. Yeah, it's been the worst decision I ever made. Was that second?
What were the challenges with it?
Both needed a refurb. Both were a reasonably good deal that I got. There was uplift, and I could refinance to take money back out, which I did. But the Westmoreland Street one, just the refurb went way over budget. Didn't know what I was doing properly. Yeah, you know, lots of things that I didn't anticipate for, like a full rewire. Went and did all the windows again. It's had recurring bed bug issues as well.
Wow.
Which was apparently just...
That's one I've not encountered yet, actually.
See, I didn't even think they were a real thing. Yeah. I thought it was just something you say to your kids. Like, to get the bed bugs out.
Exactly.
Oh no, they're real. They're real.
And they do bite, I would imagine.
Oh yeah. Well, I don't know. I've never been bitten by them, but when I was first in there doing the refurb, you know, there was cockroaches about. And I just thought these little bugs were just baby cockroaches because they were all in the same kind of area. And it wasn't until I posted a picture on my Instagram at one point and said, "Oh, cockroaches," or something like that. Someone commented, was like, "Those are bed bugs," but that's how
Jesus. You got another infestation to deal with. The refurb thing is the hardest kind of part for me. You know, okay, you have to find the deals, but you don't commit to the deal till the numbers work. But then refurbs do have a habit of getting out of control with, especially when you're not used to dealing with tradesmen. And it's been one of our biggest challenges. We've kind of got it sorted now, but really only over the last 6 months. We've had our own building company for 2.5 years now, and it's been a fucking nightmare. Of all the businesses we have, it is without a shadow of the doubt the biggest headache. You know, we had at one point 25 tradesmen working for us, and the ridiculous amount of issues we had on a weekly basis between the clients not happy with work because the guys have just pissed off halfway through a job, or you know, they've not finished things properly, or the guy's not turned up today because he was out drinking last night because it was the Old Firm game, and it is just a brutal game. And what we've found through that process is it's just easier to deal with self-employed tradesmen on a fixed price contract, and they get paid when the job's done right, and we get through stuff quicker, we get through stuff cheaper than having our own guys and vans on the road and maintenance of the vans and fuel. And it's been a very expensive lesson for us, but
full lesson learned though.
One that we're through the worst of, I would say.
Good.
So yeah, the refurb didn't work out great on that one. Tenant issues afterwards, or
tenants have actually never been a problem there. It's obviously the bed bugs have come back a couple of times and tenants leave, fair enough, and then I have to get the exterminator out and had the council out because they do it for free in Govan Hill because it is a problem area. And the street is apparently notorious for it. That's why they just keep coming back. But that didn't work, so I had to just fork out for professional exterminators to come out every time. Tried everything from fumigation to infrared, and but now there's a big roof repair going on as well, which have been in the kind of talks for ages. Probably why I got a good deal on it in the first place.
It was a good deal, you know, and that's it. You know, some of them look like a great deal on paper and it just doesn't pan out. But you know, it's for me, it's always a numbers game. You know, if we'd stopped after the first couple of deals we did, you know, the business wouldn't look that great. But we've ploughed on through it, and we're at 200 odd properties now, and the balance of things is much more good than bad, you know.
Yeah, that's it. Safety numbers.
Exactly. So property investment was something you found. How did you transition into the whiskey investment?
Yeah, so the whiskey and the property almost happened side by side simultaneously. When it was lockdown, people weren't really flying, so things weren't really needing fixed. Paul and I, both working at the aircraft engineering company, we were furloughed for a long time. We were furloughed for like 7 months or so.
Wow.
And there was a lot of talk of downsizing, redundancies. Paul did end up taking redundancy. I held on, and I did actually manage to keep my job. But around that time, he used to work in a whiskey shop, so we were drinking whiskey together. He would recommend me collectibles to buy that might go up in value, or like good things to try, like this is really decently priced, this is something good. He was kind of the knowledge getting me into it, and we stumbled onto, or he introduced me to independent bottlings, which is kind of what we do now. It's where people buy casks, bottle them under their own brand as a third-party product.
Yeah.
And there's a lot more creativity allowed there, basically, because like an old distillery that's been running for 200 years or so, they're never going to venture too far from their own branding, their legacy branding, their labels, their mixture, like the way a 12-year-old core release tastes will always be the same, because it needs that consistency. But with like a single cask independent bottle, you know, it's always something different or something interesting.
Yeah.
And I like that. It was almost like craft whiskey, like there's craft rum, craft gin. It's like this is its craft whiskey renaissance sort of thing.
And there's been a massive movement towards craft beers over the last 5 or 6 years, but maybe more. I know I spent a lot of time in COVID trying different craft beers, mostly because I was bored and you could order them online.
Like yeah, same.
And I don't, you know, you look at companies like Brewdog that have just blown up, you know, massive scale over the period. You know, I think the last 5 or 6 years have been insane for them. So you can see how whiskey could have that popularity. You know, I mean, gin's got hugely popular for a period of time as well. And you know, whiskey, the beauty of it is, whilst it's distinctly Scottish, it has worldwide appeal.
Absolutely.
So how do the sort of economics of, you know, a barrel investment where you're labeling it yourself and selling it, how does that work from an investment perspective?
So that actually came a little bit later on. What we started as first was when we were drinking these indie bottlings, we realised there wasn't one shop that just sold these things, you know.
Yeah.
We had a few brands that we liked, but you could only get this one at that shop and this one in this shop. And we were like, okay, why don't we just make a one-stop shop for indie whiskey?
Yeah.
And that was how Damn Good Drams kind of started. We just reached out to our favourite brands and said, hey, can we buy some wholesale and then sell it on? And they were like, yeah, sure.
So that became an online e-commerce business.
Shopify shop, exactly. And we tried a couple different platforms first, like Wix as well. And it basically started on an Instagram page as well. Like we were just taking nice DSLR shots of the bottles and so and there was quite a big following for that, and that kind of built up. And then we started the shop, and because indie bottlers rely on the cask market, you know, we were having some people looking for casks, asking us, and some people offering them. We were putting 2 and 2 together, and eventually we saw, okay, yeah, there's a market in there for us as well, and we ended up buying some for ourselves, selling some. It was the first cask that we bought was a Stoisha 7-year-old, which is a peated Bunnahabhain.
Right.
It's like an Islay whiskey. We bought that for £5,000 with the intention to bottle it as our first bottling. But later down the line, we got an offer for that for like 6,700, and we're like, wow, that's a
quite a profit.
Massive markup after only like 6 or 7 months.
Wow.
And Stoisha itself has seen a huge uptake in prices. Like one of the most, I don't know, best performing whiskey distilleries that you can.
So this is, you know, and I was trying to get my head around whiskey investment, you know, knowing you were coming in today. And I was trying to understand the differences between a bottle investment and a barrel investment. And, you know, my understanding of barrel investment is it's generally a much longer term investment, because, you know, taking a 5-year whiskey to an 8-year whiskey doesn't necessarily bump up the price. However, then if you've got huge brand growth from the original distillery, you can get quick wins, right?
So that does definitely affect it. Like in the case of the Stoisha, we've seen that with some others. Like Macallan obviously is the biggest name in whiskey just now. Yeah, most likely. a cask of Macallan is like hen's teeth. You'll never get your hands on one unless you're like in the know.
Serious money as well.
And the ones that I see are maybe like 20, 25 years old, and they're going for $500,000. Your standard kind of cask, the ones that we deal with, you're looking at like 10 to 12% increases in value year on year. And the nice thing about whiskey is it's and the unique thing about whiskey is as well, it's natural appreciation as it ages. No other asset really does that, where, you know, it's organically just getting older. The whiskey inside is changing, it's maturing, it's getting more effect from the wood, and thus becoming more valuable.
Yeah.
And that's almost what drives it. And then obviously distillery performance and marketing like that does drive up the prices. But
I mean, there's very few commodities that you can trade that are going to get more valuable with time. I mean, you talk about property gets more valuable with time, mainly because of economic conditions, but that still comes with a whole bunch of maintenance, because as a property gets older, there's going to be a lot more maintenance. It doesn't get better with age as such, you know. So it's a really interesting one for me, and I think the question for me to understand, when you have a barrel, is it not the case that there's like a level of evaporation and loss over time as well?
There is the angel share.
Yeah.
So that's typically 1 to 2% per year. And it can vary whether that's the actual volume going down or whether it's the strength of the alcohol in it. So I've seen that. And
I think if it drops below 40%, then it's no longer.
Then it's scupped. But these things are filled at like high 60s.
Yeah.
It does take a long time before it gets there. On the Macallan, I saw one recently that was, I think it was like 300k or so. And this barrel was almost empty and sitting at like 43%. Like, this is a
teetering on the edge.
Yeah, like that's a hot potato. Someone's going to drop. Someone's going to lose out in that. But most of the stuff we're dealing with is, you know, 0 to 15. That's the sweet point for us. Because at kind of 7 to 15, that's when bottlers like us will snap it up.
Yep.
So we provide that exit. We'll either buy it ourselves to bottle, or one of our many bottlers that we sell through our website and that we know they'll buy it from us and bottle it that way.
When you buy a barrel, how do you manage sort of storage, continuity of the product over time? I guess there's a level of testing that has to be done every so often.
So because you're buying from an established distillery, you kind of have their reputation to go on by quality of product. With storage, it's actually pretty cheap and pretty easy. So we don't have our own storage facility. We outsource that. It needs to be stored under bond.
Yeah.
Because it is
that's a VAT and tax
size good.
Yeah.
And it's actually because of that evaporation that it's a tax-free investment as well.
Yeah, so no capital gains tax to pay on any profits that you make from it.
It's a wasting asset.
Yeah,
wasting asset. As HMIC call it. But because of that, it is very strictly regulated in where it can be stored. Like I can't just have my barrels in the garage or anything like that. And
you probably wouldn't want to, given, you know, the fire risk, I guess, security issues.
Yeah, so they are all insured as well. So we actually offer, when people buy casks through us, we do the first 5 years of storage and insurances on us, because we're paying like £70 per cask per year, roughly. Depends. If it's a more expensive cask, the insurance will be more, sort of thing. But ballpark, you're around there.
Tell me the flip side of this with bottle investment and how that kind of changes versus barrel, and why did you go straight to barrel?
Bottle investment isn't really something I know much about. No. It's something we kind of played with a little bit to start with, and we almost went down the route of becoming an online auction house for collectibles. Yeah. Paul had a family friend that had a collection that she wanted to sell, so we kind of did that, but the consistency and the kind of markup for us wasn't there. Like, there wasn't enough meat on the bone for us to do that, and it was sustainable. So we went down like the retail arbitrage kind of route instead.
I think that's maybe the attraction to bottle investment for people who are kind of at the start of a journey into wealth, is that it's a lot more affordable than buying a barrel. You know, you can pick up a relatively good bottle, I guess, in the hundreds rather than thousands or tens of thousands for a barrel. But flip side of it is the profitability in it isn't going to be as interesting.
And I feel like the bottlings are investment side. I mean, I don't know much, so someone might be listening to this and thinking I'm an idiot, but I think it's a lot more subjective. Like, who's determining the value of this? It's only worth what someone's paying in that sense. Whereas casks are, the way we price casks is we're looking at them, we evaluate them as if we're going to bottle them. So we have a full system to see, okay, what is our return on this? Were we to bottle this cask and get, say, 300 bottles, sell them at X, what's our return on investment? And that's something I actually got from the property side of things, from kind of working out my returns on property. It's like I kind of transferred those skills to this. And we use that formula when we're looking at cask offers to see, okay, is this cask underpriced or overpriced? Is this a good deal, sort of thing? Because there's a lot of cask investment companies now as well. A lot of them like down south and so. And I get all their lists. I always, ever see an ad, I'll sign up.
I've definitely seen those ads where you can basically just buy into a barrel that's sitting on the ship. I guess they do like apportionment as well, where you can own part of a barrel. Or
some people do. Most of the big ones are. It's full barrel. So we actually started a cask share program as well, but it's not just a share in the cask that we're selling. It's a share of the whole bottling project. Yeah. So we've just done that. We're just about to bottle our second one from it. The first one's a bit of a longer term one, but the second one was a quick turnaround one where we had the cask ready, but we thought, okay, this whole project's going to cost 13k. We could split this into 26 £500 shares, offer a fixed return. Another thing I kind of got from the property scene, people offering fixed return loan contracts and stuff like that.
Exactly, yeah.
Could offer something like this. We know what we're going to make on the other side of this because we've got the track history to kind of work it out. We know what we can sell this for. So we can offer 15% quite happily, guarantee it by contract, and it offers a low entry point, low risk investment option for people kind of just dipping their toe into the whiskey scene. Yeah. Because like you said, it's like the cheapest cask we've got is like 2,400 or so.
Yeah. So it's a sizable investment for some.
It is.
So it gives them the opportunity to, as you say, dip their toe and feel it out before they potentially look at something bigger. How do you manage investment decisions when it comes to a barrel, short term versus long term? Because there obviously is an expectation that you're going to be bottling a certain amount of whiskey to push out every year. So you have to have whiskies that are at maturity, and then presumably you have some investments that are a bit longer term where you have younger whiskies. How does that balance?
So we kind of look at it, bottling is our core business, so we're always looking for bottle ready stock or stuff that we can kind of improve on. So there's ways that you can add value to whiskey as well. I love all the crossovers between property and whiskey, so I always like using the terminology. So like you add value to a flat by doing a refurb. You can add value to a cask. Say it's in an ex-bourbon barrel, you change that barrel, put it into a sherry cask instead. Right. Leave it there for a year.
And that's presumably going to change the taste over time.
Exactly. The whiskey interacts with the wood. The wood soaked with the sherry that was in there before, so that kind of seeps into the whiskey. It gives it a much darker colour, sweeter taste, makes it a lot more valuable than it would have been in ex-bourbon. So sometimes we do that, and you can demand a higher bottle price for that as well.
Okay.
So like,
what kind of time frame does it have to be in the cherry cask to be the sherry cask even?
Depends on the size of the cask. So a smaller cask, because the smaller the cask, the more whiskey is in contact with the wood. Yeah. If you think of it, there's less in the middle. So a smaller cask could be done in 6 to 8 months. Bigger one maybe a year to 2 years. Sometimes you see ones that, like we've done some bottlings that have been in sherry their whole life. Yeah. 12 years in sherry or 12 years in port. They're obviously a lot more valuable. You can demand a higher bottle price for them as well. They're a lot more tasty too. But stuff like that is something we do for our bottlings as well. Like this one here that I've got you is an Altmore 9, and it's been split into three small casks. So it's a really rich finish, and they were ex-Madeira wine casks.
Oh wow.
Sweet wine from Portugal.
I like it. I like a sweet wine, to be fair. So no, it looks great. It looks great. What has been your favourite whiskey that you've bottled, or the most popular one, whichever?
Most popular and favourite probably, and quite close to my heart, was a Glengoyne 11 that we did.
Right.
So I grew up quite close to Glengoyne Distillery. So that when we got this cask, it was like, oh, yes, this is like almost like a bucket list
big deal.
Ticked off quite early on. And we split that into 2 smaller sherry casks as well and finished it. So it had like a nice sweet kind of raisiny, Christmas pudding kind of flavour, a nice dark colour. And that is just sold out as well.
Did you split it into 2 purely because that was the size of the barrels that you had, or was it with the intention that I'll hold one of them longer? Or
no, so we split into 2 and battered it back together and then bottled it. But the reason for doing it into 2 smaller ones was, like I said, quicker and richer finish. So we could have put it into a big cask and held it a bit longer, but it wouldn't have been the same. It wouldn't have been as good, in my opinion.
Yeah. Excellent. What would be your kind of primary advice for anybody that's thinking about starting to invest in whiskey?
Talk to me. Nah, I mean,
check out Damn Good Dram online.
Definitely. Just look into, do your research, compare prices, shop around. Like, you quickly see there's always a lot of one thing on the market, especially like say new make casks, like stuff that's just been distilled 2024, 2023. There's always like a flavour of the month sort of thing. And there'll be a lot of it. Like when we got started, there was a lot of Tullibard and a lot of TNNish and so on. We did sell some as well, but it got to the point that, okay, this is like oversaturated now. We need to start finding some other stuff to sell. And like there was a lot of people that were selling Tullibard and a TNNish for twice as much as we were.
Really?
And that's when you get stung. Like that's when you need to shop around, because there are people out there that just take the piss basically. With us, we're always like a strict 10% commission, and our idea is obviously you can't bottle and you make straight away, but say if it's an aged cask that we're selling, it should be a profitable investment. You shouldn't have to wait 10 years to get your money back like you do with some other people. Like so yeah, watch out on that.
Be careful. I mean, I guess it's an obvious potential pitfall in so far as that it is a type of investment. It falls out with FCA regulation, so it's an unregulated market, and any time there's a lack of regulation, there's opportunity for opportunists to step in to the market. And to be honest, there's opportunities for opportunists even when it is regulated, so it doesn't necessarily go too far. One of the things that I'm sure I read along the way was that there is a fundamental difference in the sellability of a barrel, whether you have a certificate or ownership of that and the ability to sell. Yeah,
so that's something that we do offer if people want it. Most of the time, that's because to own the cask, you need to have the account at the warehouse that it's sitting in. And that's when you can have the delivery order. So we do say to people, look, if you want the delivery order, you have to do it. You just need to set up an account at X warehouse, wherever it is, or get it moved. For a lot of folk, they can't be bothered with that. So we just hold the DO, and we offer the first 5 years of storage and insurance for free.
Yeah.
Because obviously, if they take the DO, the cask is their responsibility. They need to insure it. They need to pay for storage.
Yeah.
They can sell it whenever they want. But if it's under our remit, they just come to us whenever they want to sell it. We can handle their checks, their bottling if they want, samples and such like that.
So is that a service you do as well? You do the physical bottling for people?
So we have done a couple of investor glass shoe bottlings as well. Because say like if you just had a cask and you wanted to bottle it under, I don't know, make it whatever you want, standard tall round label with your face on it or something like that. It's a nice gift, but it might not necessarily be sellable.
Yeah.
Because you have to kind of look at it as a product then. And you go down the realms of marketing and like customer base and everything. That's something that we already have established. So we offer like a Glasgow Spirits Co. private cask bottling, where it's our branding, our bottle shape, our dry goods, everything, and our customer base. So we handle the distribution then. Yeah. We have done a couple of our releases are investor based. And that one, you might see, have a look on the registration of the aircraft, is actually the name of the investor.
G. Aaron.
So we always do a little shout out to the investor that funded it.
Excellent. I like that. You talked kind of briefly about 10 to 12% returns. Is that broadly speaking the target with whiskey investment?
Yeah, so that's an industry kind of average. So there is some of the bigger investment companies have done almost like an index of historical data. And that's where you can see they actually have it slightly higher. I think their average is about 15%, but conservative with a small c, 10 to 12 is quite standard, I'd say.
I think that's very attractive for a lot of people. You know, especially if you have a passion for whiskey. You know, at that stage, it can become almost a no-brainer. Speaking with Sam Kavanagh the other day about, you know, trading, and one of the things he brought up is, you know, the expectation with an investment. You know, you can stick something in the S&P 500, which from 1950s to now is an average return of about 10-11% per annum, compound annual growth rate year on year. It'll go up and down year on year, but if you're looking at a long-term investment, safe, solid, don't have to think about it, you can park it there. So when you're talking about alternative investments, you have to be looking at a little bit more than that.
Yeah.
And that really ticks the boxes for someone that, one, has a passion and interest in it, and two, is looking for somewhere to park their money because they don't trust the banks, and nor they should.
Absolutely. That's why it's such a great hedge against inflation as well. You know, it's naturally appreciating, independent of economic conditions, market demand. Obviously, distillery performance does affect it. Yeah. And then it's tax-free at the end as well.
That's the big win.
The golden ticket.
That's the big win.
I like to call it liquid gold. It's
liquid gold. Well, and that's it. But even with gold, a lot of the tax benefits only come with investment grade gold or coins from the Royal Mint. You know, if you're buying other types of gold, you don't have those tax protections, and you can avoid the VAT by putting it in a bonded vault. But you know, the returns are only about 4 to 5% over the last 30 years, so it's pretty modest. This is, you know, fundamentally more attractive. Talk to me a little bit more about Damn Good Dram as a business and your partnership there. And how the dynamics of that partnership work. It's something that interests me because I know I couldn't be doing everything that we do at Root Group without my business partners, because there's just fundamental skills that I don't have. I'm always interested to see how people's relationships with business partners have either organically or formally progressed to the kind of split of skills and responsibilities. And you know, how is it going? You know,
it's going good. Overall, it's going very good. It's been consistently getting better and better. In terms of like split, Paul and I are the only two people in the company. It's 50-50 for us, and we kind of do everything. Both of us do everything. We're both sales. We're both customer service. I probably do a little bit more of the creative side of things, like handle the Instagrams. Do like the newsletters and stuff.
Are you the IT guy there as well?
I think both of us. Like Paul was working. He's actually just handed in his notice to go full time in as well.
Okay.
So he was working as a data analyst afterwards. So he's also very Excel savvy and good with data and numbers and so on. And that's why we're good at evaluating cask deals and opportunities. Looking at business plans like that. But we kind of just both do everything.
I mean, it's, you know, it's emblematic of anybody that's starting their own business. You have to have multiple hats, you know. You have to be able to pick things up, and you are the business at the start. And is Paul leaving his job to come full-time representative of the scaling of the business, the amount of time and commitment that it's taken now?
We wanted to get to a certain point where it was sustainable and we were paying ourselves, because for a long time, we weren't paying ourselves. It was only October last year, so like we first started. And then it's been consistently getting better and better since then. We just decided, right, we're just going to set ourselves really aggressive sales targets. Hit this number, like this is what we're going to get, and then we can both take X out. And every month since then, we have hit those targets.
Excellent.
So January was slightly quieter. It's always going to be a quieter month for the drinks industry. We didn't quite hit our target, but we still exceeded December's target, which is still saying something. As that's December. It's the business month usually, like
massively. I think it's a really important point you make about starting a business. People have unrealistic expectations, and unfortunately, it's driven by a lot of the marketing, certainly in the training industry, where you've got get rich quick schemes or whatever. It's just understanding that building business is longer term, and it's challenging, and it's going to be a huge amount of work to get something off the ground with very little benefit in the short term. But the massive benefits are there in the long term once you get things up and moving.
We wanted to build something sustainable that can go on forever. Really.
The analogy is always that a rocket takes 80% of its fuel to get off the ground, and then once it's moving, it's pretty easy from there. Well, it's never easy, but no, I think that's a really valuable point. What is your plans for the future with Good Dram?
First thing is probably our own premises, our own bonded warehouse. That is probably on the cards end of this year, if not next.
So you're going to manage storage of other people's?
We want to basically bring all the casks. I think we've got between 50 to 60 casks on the books just now. Want to bring them all in one place and enable that kind of experience where, like, say if you bought a cask, you could come there, you could have your name on it, you could come draw your own sample, sit there, have almost like a bit of a lounge space where you can sit and try, and
a real experience for people.
Exactly. And then also have somewhere where we could bottle our own products, do the glass, bring everything in-house, maybe even do bottlings for other people, have that. So that's definitely on the cards. And then in the future, distillery one day is probably where we'd want to go.
Yeah.
We need a bit more money for that. Need to sell a few more casks.
It's a journey, but at least you have a kind of clear direction of where you're heading to, and it sounds like with what you've built with the company, you're already offering something that is quite unique. You said that these bottles aren't readily available in one place, so bringing that all together and the plans for the future sound really cool. It's always a great place to start when you're bringing something new to the market, that no one else is doing.
Yeah, and it's fun as well. Like, I think that's a very important and overlooked part a lot of times. It's got to be something that you're passionate about and interested in, and like designing the labels and thinking of ideas for them, and even just finding an interesting cask that is going to be good, but you don't really see very often. That's kind of what we look to bring out to the market, and it's exciting.
Well, it's like they say, if you love what you do, you'll never work a day in your life. And too many people think, okay, I work for myself and then that's it, I'm free, I've got no one to answer to. Well, you do. You've got clients to answer to, you've got staff to answer to, you've got probably more people to answer to than you did when you're employed. You have to love it. It's not as easy as some people make it look,
Yeah.
So you've got the property thing going on, you've got Damn Good Dram going on, and from your Instagram I can see that you do a lot of travel, cold water swimming, some more extreme sports. Like, well, I mean, I play tennis, so anything that's not inside is extreme to me. But how do you balance work life? And it certainly looks like you've got a pretty good balance going on.
Yeah, I don't really want to see it as like work-life balance. It's just life. Like, I just try and see the work I do for Damn Good or the work I do in the property, because although I wouldn't say I'm like full-time property, but there's always fires to put out. There's always something. And it's just kind of, I try and prioritize my health first of all. Like, I'm very big going to the gym, climbing, eating well and just enjoying life as well. And I want to appreciate the little things and the beauty and going outdoors, and that's important to me. That's very high in my values.
Did you do that before your father passed away?
Nah, that's one of the things that changed, and that was actually one of the reasons why I wanted this pursuit of financial freedom initially as well. Is when I was born, my dad retired from his job. He was a rigger. Yeah. And he retired, and he was there for me my whole childhood growing up. Yeah. And I was like, I need to at least have that for my kids. Like, I need to be there for them. I want to be even better than what my dad offered to me,
It's an incredible thing. And, I had a very similar situation. My dad was quite a bit older. He was 47 when I was born. So, quite an old dad. And he'd retired quite early into, my schooling So I was always used to him being old. You know, he was like the one that dropped me off at school most days, picked me up, made my dinner. You know, my mum was still working at the time. And he passed away when I was 21. And I remember it hit me big because he'd been kind of the stability. I mean, my mum's amazing as well, to be honest. But, you know, it's a different dynamic when, you know, you've had essentially a stay-at-home father, you know.
Yeah, oh, definitely.
So getting that balance is really important. But what I find most interesting about people's transition between, you know, employment and financial freedom is that exploration of what are the things that are going to bring you value in life, because my expectation versus reality is hugely different through that journey. You know, I mean, it would have been about, you know, being on holiday all the time and driving fast cars and having mansions and, you know, all those sort of things that kind of attract you to wealth to start with. And through the process of, you know, building businesses and creating wealth, a lot of that gets knocked out of you. I mean, don't get me wrong, I love holidays. I still love cars to a degree, but, you know, it's not what drives me. You know, it's not the things that fills up your cup, so to speak, you know. And for me, it's just finding these things in life, like you talk about the climbing, travel, that make you a better version of yourself. You know, I always find that when I come back from a trip that I'm more energized, more ready to go, more ready to take any issues head on. And then if I find I've knocked the balance out for too long, where, you know, we've had an intensive focus on work, I'm drained. Yeah. You know, even if I'm exercising most days and eating okay, I'm still drained. You know, it's that balance of the things that are filling you up and the things that you may still love but can drain you. You know?
No, absolutely.
But even having the time to be able to figure out what it is that you want to do with your time, because a lot of people get to retirement age and they have no idea what to do with their life. No. Because it's always been about work. They've had that structure, and you know, it can lead people down a kind of sticky path into depression, especially if you've got under provision for your retirement. You know,
it's a scary situation.
Who wants to end up there? You know?
Yeah, I definitely don't want to just rely on like a government pension or anything like that. Like, that's why property was a big thing for me.
I'm not sure it's going to be there by the time even I get to retirement age. So
I think so.
And you know, I was reading the other day, the average pension pot for someone in their 60s in Scotland is something about 65 grand, which is fucking nothing. Yeah. You know, buy an annuity of a couple of £100 a year if you're lucky. So yeah, nobody wants to end up in that situation, but I think it's an incredible legacy for your father to have, you know, led you on this path, you know. And it's I guess you must have a level of satisfaction that, you know, your life as it is now has been added to greatly by your father and that experience, even although it must have been, you know, extremely difficult at the time. I always end the podcast with the same question.
Right.
And that question is, what does real wealth mean to you? And I think we've already talked about a fair bit about what's your thoughts?
Time and freedom to enjoy the things that fill up your cup, you were saying.
Yeah.
Yeah, being there for my future family. I mean, I don't have kids yet, but that's something like, that is a main driving force for me as well.
Yeah.
It's like, I feel like that's probably my main purpose in life, is to be a good dad one day.
The game changes when the kids come along, you know, massively. I was talking about that yesterday, just the incredible feeling of responsibility that comes out to boys, and they're chaotic and mad and all things that young boys should be, but 3 in 1. But, you know, it's just incredible to think that your life could change so much, and like these little guys come along and become like the driver of everything, you know. It's an incredible experience, really. But no, I get that, and you're placing yourself in such a good position to you know, take the value from the experience you had as a child and having your dad around, and you've created the structures around that. So congratulations.
Thank you.
It sounds like you're on an amazing path, and I look forward to seeing what Damn Good Dram does and you do in the future.
Cheers.
Thanks a lot.
Thanks.
This has been the Real Wealth Podcast. I'm Alex Robertson, and thanks for joining us on this wealth journey.